Alrighty, folks, like promised in the last video, we're going to break down Netflix in this video and go over some other stocks that are breaking out like you guys saw in the title. I think I titled this video 3 stocks that are breaking out or something like that, but Netflix is one of them. So let's just dive into it and break down what's going on with Netflix and again, these other stocks. We'll go over the charts, talk about what I'm doing, all that stuff, the whole 9 yards. So if y'all find value, hit that like button, subscribe, and don't forget to get your free money from Moomoo and from Webull, link down below. We'll talk more about that later. And now, cheers, guys. Let's dive right into the video. So I'm sure you guys saw Netflix stock is up a ton today, which is pretty impressive. Let me actually pull up this article. Actually, wait a second. We'll pull it up in a second here. First, let's take a look at what Netflix is actually doing. It is up over 10% right now, up over $34 per share on the day, which is just insane. And you guys can see on the 4-hour time frame, we're completely breaking out of the wedge that we drew out a couple of videos ago, right? We're above the moving averages as well, and we're taking out the highs not only from earlier this week, last week, but also from a couple weeks ago, and now we're approaching the highs from the beginning of February, being about $379. You guys probably remember we hit 379, went down to around 285, so we saw a drawdown of 25%. And well, look at that, guys. We're pretty much right back near those highs from again beginning of February, being about 379, 380. So right now we're at what, 374.50, again up over 10% for a company like Netflix, guys. That's massive. Let me actually pull up the market cap here on my phone. Bear with me, guys. This market cap is what, 100, 200, what is it at now? 170 billion, 170 billion roughly is what the market cap is. So a 10% move, we're adding 15 to 20 billion dollars in a day to the market cap. That is insane. That is a very, very big move, and it's breaking out, no doubt about it. But one thing worth mentioning is, guys, to play devil's advocate, it is a little bit overbought, so I'm a little nervous to FOMO into it here. I would not be surprised if we did see a little pullback on Netflix, maybe down to around 355, 360, 365. Maybe it comes down there, consolidates a little bit, then maybe makes the move back up to 380, maybe higher. I don't know. Time will tell. But as of now, I'm watching to see how it unfolds, and in my opinion, it is a little bit overbought, and it might be due for a pullback. We'll see how it actually ends up playing out. And of course, guys, the catalyst that's moving this, that's causing this 10% move, I'm sure you guys have seen this, maybe not. It's on the news that Netflix is now saying they have nearly 5 million monthly active users on its ad or on their ad-supported tier, which you guys probably remember. They added this tier a couple months back. It's a cheaper, monthly payment to be a Netflix subscriber, but you're getting ads on the movies, shows, whatever you're watching, right? And you guys can see right here, 6 months after its launch, Netflix Inc.'s ad-supported tier has nearly 5 million monthly active users globally, according to the streaming giant on Wednesday, which is huge, guys. I mean, what is it a month? $7 a month. So what's the math on that? 7 times, 5 million. They're making $35 million a month, pretty much on average, roughly, with 5 million monthly active users, which over a year, what is that? I mean, that's $375, million. So this is going to add up, especially as it grows. And think about it, guys. If people are cutting back on their budgets now, maybe they are, maybe they're not. I mean, some people are. We all know, a lot of Americans are, living paycheck to paycheck. They don't have much money in savings, stocks, and so forth, right? So if they want to cut back, what are they going to do? They're going to go to the $7 a month ad-supported tier, which I think the other one, the higher up tier, I forget exactly how much it costs, but probably like $15 to $17, maybe pushing $20 depending on the plan, users, and so forth. So yeah, I mean, this is pretty good news in my opinion, for sure, moving forward. The fact that they're at 5 million a month right now, and that's probably only going to go up, in my opinion, guys. We could be scaling to 10, 15, 20 million. Who knows? I mean, we'll see how they do in their next earnings, which I believe their next earnings are pretty soon here. Actually, no, they reported earnings back in April, right? So yeah, we're going to have some time until they report again. But either way, Netflix is looking really strong. And the next stock here, guys, bear with me. I'm not trying to spend too much time on Netflix, but I think that's good stuff out of them. And clearly the stock market loves that because that's the first time they actually disclosed that number. And you know, it was kind of nobody knew what it would be, but now we kind of have an idea of it. And of course, we'll get more info on that in the next earnings report, on the next earnings call, no doubt about it. And in my opinion, guys, again, we have to see a little bit of a cool off. If so, that could be a nice entry point on Netflix, at least for me, guys. And Amazon's the same thing, which is the second stock I want to cover here. Amazon is up 2% or 1.5%, doing very well, and it is starting to break out of the channel that we talked about a couple videos ago, or whenever that was. I make a lot of videos, guys, if you have not noticed, right? So we covered Amazon. We talked about how it could break out of the channel or get rejected and start going back down to, let's say, 105, 110, and clearly it is breaking out of the channel, right? We're taking out 115, now we're at 117, and at this point, in my opinion, we could be going towards the highs from right around earnings, about a month, not even, 3 weeks ago, right? Yeah, 3 weeks ago, we were at about 122, 123 bucks. That's where I feel like Amazon, AMZN, could be going here on this breakout. And the next stock, guys, let me pull it up here, is one that's starting to break out a little bit. Not fully yet, not like Netflix or like Amazon. It is Foot Locker. And the reason why I'm bringing this one up, guys, is because tomorrow morning, Foot Locker is reporting earnings, I believe. Let me double check. Yeah, it's tomorrow morning, right? Yeah, tomorrow morning on the 19th, they're reporting, and this stock yesterday did very well. If I pull up the 5-day, 5-minute, you'll see yesterday it went from 39 bucks pretty much all the way up to 41.50. It ran up 6.2% intraday, and now it's up another 0.5%. We hit a high this morning or earlier today at 42.19. We took the highs out from, yesterday. That's good. And to me, guys, we're not fully breaking out on the 4-hour chart yet, but we are one breakout away. Let's say we break above 43 bucks. That was the high from the end of April. That's where my alert is at. That could be where we get that massive move, which honestly is probably going to come with earnings. Well, I'm not going to say for sure it's going to come. All I'm saying is that's going to be the catalyst, whether we, break out above 43 or get rejected and start going under 40 again. It's all going to come down to earnings and, whether they're good, bad, how guidance is looking for EPS, revenue, all that good stuff. You guys know how that goes, right? So those are the 3 stocks that I'm looking at right now. And for all you guys that stuck till the end, we'll do a bonus one here. And by the way, if you guys stuck till the end, let me know in the comments. And don't forget to get up to 15 stocks from Moomoo. Once you open up an account, you get 1 free share of stock right off the bat. Fund your account with at least $100, you get 4 more stocks. And if you fund your account with at least $1,000, you get 10 more stocks, totaling 15 free stocks. And of course, the Moomoo link and the Webull link, they help out the channel. I appreciate you guys. As always, get your free stocks. Let me know which ones you get in the comments. So for all you that stuck till the end, CRM is breaking out right now. We called this out a couple videos ago, and it just keeps on breaking out, going higher and higher and higher. Today, it's up 1%. It is up around $2, and it just hit a fresh high on the 4-hour chart. Yeah, we hit 212, almost 213 earlier today. So CRM took out the highs from, April, that was in March as well. Yeah, heading into May, we took those highs out a couple days ago. Actually, about a week and a half ago, we hit 200. We broke out. Then we were chopping around. You guys probably remember 200 to around 205, right? We were there for about 1, 2, 3, 4, 5-ish trading days. Then yesterday and today, we started breaking out of 205. Yesterday, we got to about 209.50. Now we hit 212. We took the highs out from yesterday, and we just keep on getting more bullish. And if we pull up the yearly chart on CRM, guys, we're at a fresh yearly high right now. And on the 3-year chart, we can see we're probably on a one-way ticket trip to the 220s. If I clear this alert, you can see back during this time period where the arrow's showing. You guys see that? That is where, or rather, we were failing at about 225, 223-ish. That was back in March, heading into April of 2022, so about a year ago. So the way I'm looking at it is, now that we took out 200, we took out 205, we're pretty much on a one-way ticket to 220, 223, and that's going to be the next major resistance. If that were to break, we could be going even higher. So what do you guys think? Let me know your thoughts down below in the comments. Feel free to hit that like button, subscribe, and hit that notification bell. Don't forget to also get up to 15 stocks from Moomoo and up to 12 stocks from Webull using those links down below. Check out the Patreon as well while you're at it. And with that being said, cheers. I'll catch you guys in the next video.